The U.S. tax system offers a variety of incentives and credits designed to stimulate innovation, job creation, and economic growth, and many large corporations have successfully leveraged these benefits to reduce their overall tax liabilities. In this video, we explore the top 10 U.S. corporations that have received some of the largest tax breaks, examining how these companies use tax incentives, from research and development credits to energy efficiency programs and more, to bolster their bottom lines and support strategic initiatives. 1. Apple Inc. Apple Inc. is often cited for its efficient tax planning and utilization of international tax incentives. The technology giant has been known to take advantage of various credits and deductions, including significant research and development, R&D. Credits that offset costs associated with its innovation pipeline. Additionally, Apple's global operations have allowed it to structure its finances in ways that benefit from favorable tax treaties and incentives in multiple jurisdictions, contributing to a lower effective tax rate. These tax benefits support continued investment in technology, product development, and infrastructure improvements. 2. Amazon.com, Inc. Amazon.com, Inc. has grown rapidly over the past decade by reinvesting profits into technology, logistics, and cloud computing. This reinvestment is partly enabled by an array of tax breaks, including deductions for capital expenditures and credits for technological innovation. The company also benefits from state-level incentives as it establishes new fulfillment centers and data centers across the U.S., which often come with tax abatements and credits aimed at boosting local economies. These benefits not only reduce Amazon's tax burden but also encourage further expansion and job creation. 3. ExxonMobil Corporation. As one of the largest energy companies in the United States, ExxonMobil Corporation benefits from a host of tax incentives related to the energy sector. The corporation takes advantage of deductions for drilling and exploration costs, as well as credits for investments in alternative energy research and environmentally friendly technologies. These incentives are designed to spur innovation in an industry undergoing significant transformation, and ExxonMobil's effective tax planning has allowed it to allocate more capital toward energy research, infrastructure maintenance, and operational efficiency improvements. 4. General Electric. General Electric, GE, is a diversified conglomerate that has historically received substantial tax benefits through its various business segments, including aviation, healthcare, and renewable energy. GE has leveraged tax credits related to energy efficiency and R&D, particularly in areas where the company is developing new technologies and industrial solutions. Additionally, the company's global structure has allowed it to optimize its tax strategy by utilizing various international tax treaties and credits, ultimately reducing its effective tax rate and supporting ongoing investment in advanced manufacturing and technology. 5. Microsoft Corporation. Microsoft Corporation, a leader in software, cloud computing, and consumer electronics, has also been a prominent beneficiary of U.S. tax incentives. The company's extensive investment in R&D has qualified it for significant tax credits, helping to offset the high costs associated with developing cutting-edge software and cloud infrastructure. Microsoft's strategic investments in artificial intelligence, cybersecurity, and other future-oriented technologies are bolstered by these tax benefits, which are integral to maintaining its competitive edge in a rapidly evolving tech landscape. 6. Chevron Corporation. Chevron Corporation, another major player in the energy sector, benefits from tax deductions related to exploration, production, and capital investment in energy infrastructure. The company also takes advantage of credits aimed at reducing the environmental impact of its operations. These tax incentives support Chevron's efforts to modernize its facilities, reduce greenhouse gas emissions, and invest in alternative energy sources. By strategically aligning its operations with available tax credits and deductions, Chevron is able to lower its effective tax rate and reinvest savings into sustainable energy projects and technological advancements. 7. Walmart Inc. Walmart Inc. stands as one of the largest retail corporations in the U.S., and its extensive network of stores and distribution centers qualifies it for numerous state and local tax incentives. These benefits often include property tax abatements and sales tax exemptions designed to promote economic development in regions where Walmart invests in new facilities. Additionally, Walmart leverages federal tax credits related to renewable energy and energy efficiency as part of its sustainability initiatives. These tax breaks help Walmart reduce its operating costs and enhance profitability, while also contributing to community development and environmental stewardship. 8. Alphabet Inc. Google. Alphabet Inc., the parent company of Google, has been at the forefront of technological innovation and digital transformation. The company's heavy investment in R&D, including significant expenditures on developing new software, hardware, and artificial intelligence technologies, qualifies it for various federal tax credits. In addition, Alphabet's global operational structure allows it to benefit from international tax incentives and favorable intellectual property regimes. These strategic tax planning measures enable Alphabet to lower its effective tax rate, reinvest in innovative projects, and maintain its leadership position in the digital economy. 9. Ford Motor Company. Ford Motor Company, one of the long-standing giants in the automotive industry, has increasingly utilized tax incentives as it transitions toward a future focused on electric vehicles and sustainable transportation. The U.S. government offers various tax credits for investments in renewable energy, energy-efficient manufacturing, and electric vehicle technology. Ford has capitalized on these incentives to support research into alternative propulsion systems and modernize its manufacturing processes. This proactive approach not only helps reduce its tax liability but also positions Ford as a competitive force in the rapidly evolving automotive market. 10. Bank of America Corporation. Bank of America Corporation, a leading financial institution, benefits from a range of tax provisions specifically designed for the banking and financial services industry. The company takes advantage of deductions and credits related to its lending practices, capital expenditures, and investments in technology and security infrastructure. Additionally, as regulatory requirements evolve, Bank of America continues to adjust its tax strategy to optimize its financial operations within the framework of federal and state tax laws. These tax benefits help the bank maintain a competitive balance between profitability, regulatory compliance, and reinvestment in services that benefit its customers. These top 10 U.S. corporations illustrate how strategic tax planning and the utilization of available incentives can significantly impact a company's financial health and competitive positioning. By taking advantage of credits for R&D, capital investments, environmental initiatives, and more, these companies not only reduce their effective tax rates but also secure funds to invest in innovation, infrastructure, and growth. As tax laws evolve and new incentives are introduced, the ability to navigate this complex regulatory landscape will remain crucial for corporations striving to maximize their returns and drive economic progress.